Hello, 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 everyone. Mike Arnold here, co-founder, Pat, trading partners, along with Bob Viacino. So, how is everyone doing? George, happy October. Oh, way to jinx it, George. Way to jinx it. We're going down. Good morning, Waka. Happy Friday. Market, lots going on in the UK. So, just this is, again, we have some probabilities that we'll see some continued up moves. I think we're going to retest the lows at some point, and even before the end of the year, and take them out. But, it's all about timing. And that's all it is. Added short on this pop. Good morning, Options 22. Oh, good morning to you, Buttercup William S. Good morning, Anissa. Vertical dimension. This is Amit. Well, I only see vertical dimension and teeth. Grand Rising, Christoph. Good morning, Sterling. So, again, Shakeup in the UK. Retail sales missed this morning. Market, we had earnings. Remember, don't forget the earnings from the banks. So we got a lot going on. Actually, a lot going on this morning. But again, I have to distill it always down to price action. Because I am literally not smart enough to figure out everything, all the moving parts, which is why I say get rid of all these central banks and everything, because nor are they. So stop messing with it. Let's just really get back to a free market economy. And there'll be blow-ups and there'll be other things, but at least we'll have people stop trying to figure out everything that's going on. Let's just see. So, let's see. Well, people can short the bounce. That's what's part of trading. You are welcome. Again, if I knew what would work out ahead of time, then it would be easy. And everybody, whether you're long or short, what do you trade with? You trade with stops. Why? Because you don't know if you'll be right or wrong, and you put your stop also where it would be confirmed that the trade is invalidated. That's how pick stops, by the way, or test them with systems, where the signal is invalidated. So we shall see. Again, Waka, I don't use a 61.8 because it does not test out as well as people think. By the way, all right, retail sales. 0 verse 2 expected. X autos coming in a bit better than forecast, and I'm really focused on that headline number. Export prices coming in a little better than expected. Well, actually, that's a little worse because it should have been a bigger drop. Import prices 1.2, that's a miss. So, retail sales year over year contracting from previous. Consumer sentiment is next up at 9. Inflation expectations is an aspect. I'm going to be watching that, but it'll be interesting to see. Remember, we had this sort of the summer rally in sentiment with gas prices pulling back. I'm expecting consumer sentiment to start dropping again. Will it fuel anything significant today? Not so sure. This morning, it's pretty still green morning. Oil, little still pause in oil. Banks, well, again, lots of earnings out in banks. Fed watch, I refreshed this about 20 minutes ago. It's still we're 99.4 for that 100 or that 75 basis point. The 100 dropped off the screen. It's going to be that 75 basis point. It's pretty much baked in. Still in negative gamma territory. Negative gamma territory all the way up, potentially to 3,900. So you get it starts fading pretty quickly above 3,800, especially above 3,850, but you still have the volatility moves. Trying to climb out of extreme fear mode. As I said, JP Morgan, Morgan Stanley, Citibank, You also had United Health Group, and that's a pretty big one. Wells Fargo, Bancorp, PNC. Uh, some were misses, some were beats, some up slightly, some down. Nothing earth-shattering with the banks. Again, a little slight pullback overnight. Gonna watch today for the close above the 62.5, by the way, for any aggressive buys. Personally, for what it's worth, this is aggressive raising stop. Why? We're closing in already on the other side of the daily rotation zone. Now, a close above the 62.5. A close above the 62.5 would probability C follow through to test the October highs. Okay, the first little bit of October highs. 37.81 would be the minimum target. That's only on the close, but I will be doing that is very cautious. The 75 harmonic is right at the other side of the rotation zone. So this is not any longs or not, from my perspective, and my perspective only, are not just to go to sleep on. Aggressively raising the stop, because this bounce could be short-lived. I talked about it yesterday with Bob on here. I said, with all the info I gather, when too many people are saying it's guaranteed for the end of the year, and I'm not talking retail, that I put that at pause. I put that at pause. Now, why aren't those lining up exactly? Let me use this one. If we do also the 37.5 right up here, we are into a clear path move going higher. In order for this to really sustain even more, gonna need that high daily closing at least above these highs from the 5th. And then we are into another clear path move. Again, this is not a long-term bottom. Yesterday's candle was not a long-term bottom. I'm going to stress that. Bob may think it's going to be clear sailing, and I don't know, he could change his mind. Into the end of the year, this is not clear sailing for me. This is a probability of a short-term bounce. Don't know any other way to say it. A return to the 4-hour rotation zone. Right now, trying to rotate back up. Also remember, this is going to rapidly take the cycles back to the top. It's going to be interesting starting once we get to a potential slight more rally. What I was saying into that daily clear path. Here's the other problem. We're coming up against some pretty key resistance. This is why from any longs, it's more aggressively. Here's this pretty significant breakdown zone, and then we're into some choppy overhead price action. You see it right here. So there's multiple stopping points, which is another reason, from my perspective, aggressively raise stops. Because things can peter out here, especially around that 87.5 should we continue higher. I pulled off those little 87.5s from before, but they were from this area. You see right in here, and we have a fair amount of consolidation and congestion in this whole area. So, where's the key breakdown point for anything a little longer term? Well, the key breakdown point where it tips probability, since we don't have a significant topping pattern yet, would be at 35.88. Early warning signs, since we don't have a significant topping pattern yet, would then be a break below about 36.40 for me. Because anything back in here is still key support. So that's where we sit. No significant topping patterns just yet. Trying to break out to the upside still, but that is it. Testing the other side of the daily rotation zone, which is key. Let's see. Let's see where we sit. Gonna get back to, then we'll get let's see. NASDAQ top to bottom, last drop we retraced 62. Okay, I already hit that stuff. Check out ES on a 4-hour time frame. This could be the low. This could just be the lower high. That's why, yeah, it could be just a lower high. We are against the daily rotation zone. That's why I'm saying for any longs, my perspective is to raise stops aggressively. But the real key thing is, even if it retraces to 36.44, that's just a prior support level. The real breakdown, unless I get a topping pattern, the real breakdown isn't back until below 3,600. Also remember, as I talked about yesterday on the program break point, the program snap point is right around 3,600 on a closing basis, but that's not for today. So if this does roll over, especially next week, we get a daily close back below 3,600, it could get interesting from a liquidation point. People are talking about the VIX. Right now, the only thing that I'm really tracking going into next week is the potential double. The potential double. Yes, this is also a clear path move. If we get a retracement in the VIX today, I'm keying off of $30 for the retracement. My resistance is coming in at 33. Other than that, I'm more interested in, if this pulls back, I will be watching the tick for more information. The NASDAQ has a little more room to run, and based off the daily rotation zone, so this has been a weaker market. Looking at the retracements, the 62.5, which it has not closed above, which it tested earlier today, that vicinity, that's where I'll be watching for the close. 11,263 on any rally. We go above there, then beginning next week, I will be focused on the 11,418.50 area. Why that first instead of the 87.5? Because that's also the daily rotation zone, and you are still into a clear path move on the daily and 4-hour. So we drop to that 1 hour for shorter term traders, and you only have one little pausing point, and this is an advanced clear path. Your two key areas I would watch for, not only this 11.5 area, but if you're shorter term, the next key breakdown point isn't till 11,381, right in front of that 75. So those are levels I definitely use for targets and or aggressive stop raising. The key support comes in on the NASDAQ back at about 10,965. The tipping point isn't all the way down till 10,778 without a topping pattern, which there is none yet. So that's why the first warning sign is back below 10,975 area. Let me get to the spiders and the Qs, and then we'll look at some other stuff. So, closed yesterday in the spiders, 365.97, pre-market gap up. Your key things I will be watching: the 367 on a closing basis. Key support, 367.70. Key support I'm using, this is where one instance where I will use the high from yesterday, also because it's a harmonic. So that key support right around there. The high was 367.51, the harmonic's 367.70. We start breaking, I'll put up the gap harmonics, but we start breaking down The target for me is 365.97 with a gap fill harmonic. You get a close above 367.70. My target is 371.62 in the short term. Daily rotation zone and the 75% harmonic, and also in the vicinity of a breakdown zone. Now remember, slightly above there, we have still a gap fill play, which I will take into account. So would this be a full target? This would be a stop raise from my perspective, 371.62, and then a take profit area, not only because it's a gap fill play, this is how I take into multiple information, you also have the key gap open to this. So you have this, not a prior key gap open just above the gap fill play, but the target for me, 373.22 on the move above there. And again, targets can not only be for taking profits, they can be for taking profits, raising stops, or just for raising stops, depending on your time frame. And from my perspective, also the momentum on how we get there. Higher momentum moves, I try to ride them longer. Choppy, trying to just get their moves, unwind the position and more aggressively raise the stop. Next target, 375.54. To the downside, I will be keying off of not only is the key support if we do fill the gap, if there is the rollover play and fill the gap, the next level, I want to see how the shorter term harmonics play in with this. Come on. Would you click for me? Hold on. Well, that didn't work. One of those mornings. The key area, so using my single candle harmonics. Did I just reverse that again? I can still do that because they're a mirror image. The key level will be 355.39. The major area I'll be watching is about 359.87 to 360.24 on a pullback area. And I'll reverse those later. And on the Qs, we'll do our projections. If we were to have a massive breakdown, I'm not covering all the levels this morning, but I would come on at lunch. Also, I might be a little late. I have an appointment this afternoon. I might be a little late getting back from it, so the live stream this afternoon might be 10 to 15 minutes delayed. Key area I'm watching is 260 on a major pullback or a pullback next week. So far, that will ratchet up with today's higher high. The first thing, we are into the clear path. You take off these. Key area I'm watching on a closing basis, 272.96. Above there, I'm watching the gap open price of 275. It's technically 275.02, but I'd be watching 275. And from a trade perspective, a key level would be right in front of that 275. The next area would be the 276.70 with the declining rotation zone. And then we have the gap behind right in front of the gap left behind right in front of the 87.5 harmonics. So I would utilize the 279.76. Key support, 265.65 area besides the gap fill if we start the breakdown play. So I'll use short-term gap harmonics. But that gap fill would be to 268.82. Let me just peek at the notes. So far, just a choppy thing. Not interested anything from the bullish perspective unless above about 111.30 at this point, or a breakdown perspective below 111. Dollar index The pullback yesterday and so far a pause. So far a pause. We had this little mini double, which is done. Other than that, the breakdown play, even below these two lows, 111.92, I'm not interested before a further pullback, which would be bullish for equities, 111.70. Not interested in anything really looking at it until 113.20 area. Right now, inside bar tech. Let's make sure technically, 111.90. Yes, inside bar still today. Crude, really, I'm just watching to see if it closes below 86.50, which would take it below the rotation zone. Then I'd be watching for the bigger pullback, and key support coming in 84.95, the next key support. Tesla up pre-market. The little reversal buy on the close. That would only be a short potential follow through. First target would be the daily rotation zone. So it's counter trend, so it's hyper aggressive. Still expecting, I'm still watching. There's not a longer term bottoming pattern just yet. Let's see. XLF flat to 1% up pre-market. Again, it was pretty mixed with the banks. JP Morgan, again, beat pre-market up. If we have market weakness, we'll be watching the gap harmonics for a potential gap fill play. Right now, 111.90, holding above this key close and the 50. So that is key support going into the open, but that starts breaking. We'll start watching the gap harmonics for a gap fill play. Also, you're hitting into some key resistance, so it's not great trading from my perspective in JP Morgan at where it is now. Morgan Stanley gap down. They did beat, but their numbers were more mixed and they missed on revenue. If we do have stronger market conditions, we'll be watching for the gap up play. We have weaker market conditions. The key support's back at about 76.89, so it's more of a trade. Citigroup up just slightly from the close. Weaker markets, there's just a possible short-term gap play. Stronger, we'll be watching for a run to the other side of the rotation zone. Again, they beat top and bottom line. Wells Fargo, decent gap up. Missed on earnings, beat on revenue. The only thing here is coming into the key slightly above key resistance right now. So we'll be watching. But if it breaks below 43.55, I will really not necessarily for today, but we'll be watching for that gap fill play on overall market weakness and the financial sector rollover if and when we do get it. So we'll have to look at some other stocks. Did that just come out? I have not seen. Again, I can't watch the news just while I'm doing this. But are they continuing their bond buying program? Because it was set to expire today. So I'll have to verify that. I'm not saying you're wrong. I just haven't verified it yet. Hello, Lauren. What are the characteristics of a longer-term bottom? A very long-term bottom would need a very long-term bottoming pattern like a weekly reversal signal, a weekly buy signal off a longer-term system, or a weekly capitulation confirmation move. We do not have any of those. That's why most things from a longer-term perspective are lagging. But if we got a daily capitulation, which morphed into a weekly reversal move that could be more indicative of a significant bottom. Right now, we do not have anything yet. And by the way, these are not double bottoms like on the S&P. They cannot be traded with double bottom price targets. So even on a close above this fifth high now, there are no double bottom targets. Thank you, Sterling. Thanks, Georgia. I knew Amit was a dentist. So thank you. That's why there are teeth. He must be on his dental channel. Of how every bull and their mother think. Yeah, that's why I'm overly cautious. Also, we could see one of those. There's still a lot of geopolitical turmoil. So very short term. I'm just very interested to see how today's closing against this rotation zone and with some of these key levels. If you don't have anything to do, sit on the sidelines. Let's just see how the tick opened. The ticky. All right, tick opened strong with some pretty aggressive buying. This could be a buy program off the open. So now I will be watching from a tick perspective for the people trying to learn that. I'm watching to see where we pull back to. Just remember yesterday with the bearishness, we were watching to see how long it stayed bearish, and then you saw the shift. Here's yesterday's open, very weak, and it stayed weak, and then it shifted to stronger. Now I'm watching for the exact opposite. All right, so I'm watching for a notable shift in the tick. Other than that, hold on. Let's see if Bob can join us real quick. Hold on. Let's see, Bob just dialed in. Bob? Let me see. Hold on. Bob, you're muted. Bob is muted. I know he's remote.
Hey. I was not able to unmute.
You're unmuted now.
What's the question?
What's the question? Hold on. I'm trying to get you. Hold on. See, now you're on remote, so I have to add you differently. You're taking up the full screen now. Are you working out?
Yeah, pre-scheduled workout times are Friday morning.
You're working out during the market open.
Oh, I'm watching the market. I've got Bloomberg up over here, and I've got my phone. But as I told Waka Waka and Coco yesterday, I have no positions, so nothing to speak of anyway.
Real quick, what are your thoughts just on the UK?
All right, so the thing that stood out to me the most, Kwasi Kwarteng obviously asked to step down because of the market reaction to his tax cuts, his proposed tax cuts. And the Chancellor of the Exchequer in the UK, I believe, just has blanket authority to cut taxes if he wants. So to cut those particular taxes, the rumor is now that they're going to take away that corporate tax cut as well. So overall, the market reaction is uncertainty. The pound actually came back last time I looked. I don't know if it's coming back now, but it's essentially causing a trickle down meltdown. It kind of shows that the Bank of England is in charge. So the next thing you want to see is the Bank of England actually end the bond buying today, like they said they would. So far, I'm hearing they're ending it, and they're going to step out of the way. So the timing of the two things is what I find interesting. But certainly I didn't know enough about this that was going to happen that I put on a British pound position. I did not. But I suspect it's going to leak more into the U.S. because the pound was already falling prior to Kwarteng's tax cuts. We got UK inflation numbers next week. That to me will be the actual exclamation point on what's happening right now.
All right. Did you see real quick before I let you get back to your workout? Did you see anything of interest with bank earnings this morning?
I saw Citi. So Citi is the most has the biggest foreign exposure, the big six, and they seem to be the weakest. They're winding down their Russia exposure. We know about that, but it just shows the exaggerated weakness in the international community versus the U.S. I think it was interesting where the earnings came from. Investment banking was way down, and I think that's going to continue. But retail and trading was up at J.P. Morgan and Morgan Stanley. So I think it kind of plays basically to what we've been saying. I mean, global recession is guaranteed. U.S. recession, I would put it 85%, if not higher.
Uh, well, I'm going with guaranteed. All
You know,
right.
I'm with you on that, but after my nasty call on stocks yesterday, I don't think I'm going to do that again.
Well, we'll let you get back to your workout. Thanks for taking 5 minutes to jump in.
Of course, I'll talk to you guys soon.
All right. Bye. All right, everybody. Now I'm going to have to redo my setup, but we'll work on that later. There's your pound move, a slight little pullback so far today, but no key levels just broken. Inside bar from yesterday, so nothing from my perspective to do. Glad we could get Bob on real quick. So everybody have let me jump back to the markets. I have to jump anyways. Lots to do. Looks like we're getting a little pullback. Let me see here. I got stuff to do. Key support right now, 3,700. So going to be watching for the next few minutes to see if that 3,700 holds and the rotation back up, and that's very short term. So far, you see this tick. We don't have the breakdown move. Everything so far is above zero. Even if we pull back in this this shorter term area, I don't know how this level got moved. That should be more closer to 400. Close enough. I will be watching for stuff here. Once we start getting moves down repeatedly below 400, that would be a shift for me. So far holding up, though, with the tick. So I will see if we can get a rotation play up. Also got to check the NASDAQ, which also trading against key support right now. So if the tick starts rolling over and we start breaking below these key support points, there would be a minor aggressive short into the next key areas. Although if we hold this and the tick stays up, we'll be watching for the rotation up. I'm expecting more of a choppier day today, so anything that would be done would be with more aggressive stops and targets. And if there's no great trade, it's sit on the hands. Love the dedication. That's why I wake up exactly when Pat Trading Partner starts. Well, thank you very much, Panveet. So that's my little short term, how I start looking at stuff. And remember to cycle through, watch your VIX. So far, we're getting the pullback. So we had the little official gap up. Again, watch if these key support holds with the VIX filling the gap, and then see what happens. That's for very short term plays. All right, VIX still heading down. So for the next key thing, you don't have any great clear paths, and now I have to jump literally into the open. You do. Your next key support would be 3060. And VIX, you can use technical analysis on. You can see also how that was support over here, little blip below, but then moving above, little test here, and then breakout. So that on a bullish area, my next key thing to see how the VIX reacts, the next major level is around 3060 for the going into later morning. All right. Everything that moves. But I like futures, some of the best things. I like futures, and then stocks from a swing to a longer term perspective. I like stocks. Although if there's a major stock that does something, There's always gaps in major stocks I love. But other than that, I like swings in major stocks the best. That's how we used to do stocks think tank. It was all what our average holding period was, somewhere just shy of 30 days. So thanks for the super chat, Lauren. Huge shout out to the super chat. Just looking at the dollar index, nothing. I mean, right now, this would just be short term stuff. Not real interested in monitoring anything with the dollar index until we get back above this 112.19, 113 area or break down below 112. So between 112 and 113 is no man's land. Again, yeah, big shout out to Lauren. Thank you. Thank you. So don't get too caught up on micro moves, even on a market like this today. VIX still heading lower. This is how normally on my trading platforms, I got all these windows up, so I don't have to flip back and forth. But for the sake of a live stream, we can flip back and forth. This is how I cycle through stuff. Even when all the windows are up, I'm going to hit the S&P as the majors, the S&P, the NASDAQ, the VIX, the tick are my majors. I will check in on the TRIN as secondary. It is not primary. TRIN is not in overly bullish mode yet. So that's how I cycle through stuff. And I watch. Right now, I have to flip back and forth for everybody on this stream, but we watch. So we're starting to get a little more weakness in the tick coming in, but we're rotating back up. Don't fail me now. So now we've bounced. Boy, is that a double? Hold on, I gotta check this. Remember, don't make assumptions either. Yes, we do have a potential double. So now, not only would that be a breakdown, remember, watch candle bodies first. Here's the way you do shorter term analysis. So we'd be not only, if we start getting a 5-minute close below the support point, and then I'm watching especially for this close below here. I want to see, though, where the targets hit. And they are valid. So we start breaking down. Not only will be broken, see, yes, this overnight support, which turned into resistance, which is now confirmed support. We start breaking down below that with confirmation from market internals and a slight solidifying in the VIX. That's only a short-term pullback. But again, it has not triggered. And when I see stuff like that, I will not front run. I'd rather miss a trade than take a flawed trade. So that's how we analyze stuff, and that's only for the short term. If you're not a short-term trader, this is just information for you to process, not advocating short-term trading. With that, I now have to wrap it up for everything. Do technicals work on the trend? Not as well. No. I think it looks like Tyron, but I think you meant the trend. Again, thank you, Lauren, for the super chat, and we will talk to everyone later. Remember, possibly slight delay on the afternoon live stream. Thank you very much, Christoph. Same to you. And if I don't see anybody overseas on this Friday evening with the live stream, have a peaceful weekend. Hopefully you can tune in on Sunday. Looks like key support's broken, but no confirmation yet on this double. And now, see, we got the tick weakening. All right, I'll leave it at that. Thank you, everybody, for tuning in.